Hey, what's going on, friend? Juan Pablo here. Today's topic, why lenders don't like to see a lot of hard inquiries on your credit report. You might be in a position in which you're frustrated simply because you go to a bank, a financial institution, and you get denied for the financing, the credit, the loan that you need, whether it's for personal use or for business use. So in July of 2018, I actually had a real estate student of mine, I'm a real estate investor, and my student that I'm educated on multifamily real estate to get passive income on, he got denied for business credit. Business credit is pretty much business credit cards that you can use to acquire equipment, for different types of expenses in your business like marketing, as well as to use for real estate investing, creative financing in other words. But he got denied. And why did he get denied? He had the 700 FICO score. He had the low debt utilization, the low debt to credit ratio. He had age on his credit reports, on his credit profile. He looked like an ideal candidate, but there was one thing that was holding him back. Yep, you guessed it. He had a ton of hard inquiries. A hard inquiry is when you apply for financing and the other creditor pulls your credit using their system. Now you can actually check your own credit using what's called a credit monitoring service. Get your own credit report to check your own credit. That's fine. That's considered a soft inquiry. It has no harm on your credit report or on your credit score whatsoever. But a hard pull, a hard inquiry in which you apply for financing, in which you apply for a loan, in which you apply for debt, and that other creditor, that lending institution, that bank, pulls your credit using their system, it can cost you about 5 FICO points per inquiry. So within the past 6 months, if you happen to have more than 5 hard inquiries, that can make you look a little thirsty, a little desperate. And many banks don't like to see that, despite all the other strengths you have on your credit report. As I mentioned, the high FICO score, the low debt utilization, and even the age of the accounts on your credit report. But just having hard inquiries, a bunch of them, within the past 6 months can be detrimental towards you getting financing, especially if you're using it for business needs. So back to the student situation. So just keep in mind, guys, there's more than one way to skin a cat. My job as a real estate investor coach is not to teach you one way to do 50 deals. It's actually the opposite. At least 50 ways to do one deal, because occasionally, right, you might come across a situation in which, hey, I can't get qualified for business credit, but how else can I finance this deal? Oh, maybe I can use seller financing. Oh, maybe I can use private money, a private lender, private equity partner. Or perhaps I can use a match lease option. Perhaps I can do a wraparound mortgage. There's a variety of ways, guys. But you can see your programs to learn more if you're interested in real estate investing. But I had to tell the student, hey, no worries. You can still get qualified for business credit. You just have to apply the cash flow cycle. So what's the cash flow cycle? The cash flow cycle is pretty much a cycle that I created based upon my progress of learning how to fund and finance a deal from start to completion. Or pretty much this, how to do a deal from start to completion. When I say deal, this is what I'm talking about. A multifamily buy and hold property. 5 units and up, and you're buying a property only for passive income. Income you receive on a consistent basis with little to no work required. So with that cycle, I was going over phase 1 with the student. Phase 1 is find the money. Find the money, then you go to find the deal, right? Which we can help you with at 100% Finance. If you're interested in helping you find a deal, just reach out to us, book a call. But in regard to find the money, I had to tell them the process. Hey, first thing you gotta do, my friend, is for one, you have to get the down payment money. Now it could be your savings, it could be potentially your IRAs, it could be your 401ks, it could be a loan from a family member, friend, colleague, or it could be business credit if you happen to qualify for your first round. But whatever the case may be, you gotta find the down payment money. Then the second step in the cycle is inquiry removal. And that's one step he neglected to take. But luckily he had me as a coach to let him know his next steps moving forward, so that way he can get the rest of the capital to find a deal, a cash flowing deal, so he can quit his day job. So I pinpointed, okay, you find the down payment money, then the next step in phase 1 is hard inquiry removal. You can remove those inquiries. And if you have any other blemishes on your credit report, let's say you have collections, you may also have a bankruptcy even, any other negative item that's on your credit report that's just making it look so ugly, you need to get it fixed. You need to get some makeup on that credit report, make it look pretty, fine, sexy, that Holly Berry credit. Looking so fine, so pretty to the banks, attractive as a borrower, that every lender, financial institution wants to extend you financing. So that's all I had to do with them. Hey, This is what you need to do, student or friend, all right? Get those hard anchors removed. And we have a hard anchor removal booklet, ebook, for you to apply. Very simple, but yet very effective. As long as you take the steps that we teach you in this ebook and provide you with dispute letters, you can get those hard anchors removed. Now the question is this, well, which inquiry should I remove? All of them, Juan Pablo? Absolutely not. You don't want to remove every single inquiry off your credit report. The inquiries you do not want to touch are the ones in which you receive personal credit. So if you receive personal credit and you try to dispute those inquiries, that can be detrimental. The reason being, sure, you can get those hard inquiries removed from the accounts you receive personal credit. Let's say it's a personal credit card with Bank of America. The downside, you risk having that personal card, that Bank of America credit card, being closed down. Now, if you happen to get business funding and you remove the inquiry, that's perfectly fine. We are able to remove hard inquiries from which you did not receive personal credit. In other words, if you receive business credit using our ebook, you can remove those hard inquiries off your personal credit report. So once you have those hard inquiries removed, then you can go to the next phase, which is apply for a mortgage or additional rounds of funding if you're in round 2 and beyond, like this student was in this scenario, okay? So if you definitely need inquiry removal, we have an ebook for you, or if you're looking for business funding or more tutelage in real estate investing, the proper way to structure your deals, because that's what we teach at 100% Finance, how you can obtain an income producing asset using little to none of your own money. Just do me a favor, just book a call. Check the link below to learn more. Thanks. Peace.